So today in this video, we're going to talk about how to take your accounting or tax firm to increase the fees and also not lose clients. In fact, you don't have to attain more clients to be more profitable, to have more revenue. So I built a little tool that can actually walk you through the entire scenario. It models everything from how many clients you may stand to lose by increasing fees, how to look at your market rates to figure out what you should be charging, what you should be targeting, your actual profit and revenue. We're going to go through all the numbers together, and it does pretty much the calculations for you. Just a few simple things that you're going to enter in. Now, be sure to watch to the end of the video because I'm actually going to give away this entire sheet for free. Be sure to watch to the end to know how to grab that. So what we're looking at here is, no, it looks like a lot. However, it's actually pretty simple. The big idea is that a lot of accounting tax firms, we want to charge more, we want to increase profits, but sometimes we increase fees, we lose customers. So how do we model that? What is the sweet spot? So the way that we're going to use this tool is pretty simple. The first tab is we're going to model a few things. And then the second tab is a repricing planner where we can throw in all our clients to figure out exactly how much we can charge each of these clients here, and when we can actually send out repricing letters to let them know that we're going to be increasing fees. So we want to make sure that everything adds up. So the first thing we're going to do is we are going to go through and enter in the items in the yellow. So the yellow tabs here are things that you can actually change. And I have a few blue numbers. These are the critical numbers that you should pay attention to the most. So the way that this works is, let's just use an example. Let's just say you are a tax firm. You're doing $1 million in revenue with a profit of about $500,000. And so what this is going to do is we are going to model one aspect of the firm, and that is business tax returns. Okay. We can do this for other services, but for now, we're going to focus on business tax returns. If you are looking to go from more personal returns to business tax returns, which are typically more lucrative, you might find this helpful in being able to secure more business clients by the way that you're pricing and approaching this. So the first thing we're going to do is we're going to enter in the information in the yellow tabs, the entity revenue share. So this is basically what percentage of our clients are business or entity. When I say business entity, so that's interchangeable, business tax returns, entity returns. So in this case, it's 60% of our client base is business returns. So let's just say we're a tax firm and maybe the other remainder, 40%, is just personal returns or 1040s, okay? Now, the current average entity fee. So currently we're charging $1,100 for a business tax return. Now, here we can enter in our target average entity fee. So how much would we like to increase it? Now, where do we get $2,000 from? Did we just pull that out of the sky? We're going to see in a moment. Loss tolerance. If you've ever increased your fees, you know you're going to lose some customers, but how many will you actually lose? Do you want to send out just a bunch of repricing letters and hope that half of your folks don't churn? We're going to model all of that, and you're going to do this very quickly. In this case, we're going to stomach 20%. We're going to accept the 20% loss of business clients. So basically, we will reprice, and we can stand to lose 20% of those business tax clients. And again, the goal is not to lose any revenue from this. In fact, we're going to be increasing this. The next is the incremental cost per retained return. So what this is, and I'll talk about this in a moment again, but basically, in a perfect world, if you can just, let's say, double your fee, let's say you double your profit. It's not exactly that simple. Maybe by doubling your fee, you're going to have more services associated. Maybe there's going to be a bit of more of a cost or a customer service because you're having more of a premium service. So what this does in this cell here, it allows you to model that out. So for example, let's say you want to we're going to increase our business tax returns to $2,000, but we know that for each business tax return at this new price rate, it's going to cost about $50 more per return to actually service that, right? So you can type in $50. Now, what this does is it actually computes on how that is going to impact what you're trying to target. And again, I'm going to talk about that in a moment again, where we can actually see how that works, but just keep that in mind for now. I'm going to switch that back to 0. Most of the times you can just leave it at the default and it will be fine. The competitor, federal only. So these are, again, are the federal business tax returns. So in this case, we're not factoring any state returns or anything like that. However, this number is from your competitors. So what are the competitors in your area, or if you're a cloud-based accounting firm, what are some of the websites showing in terms of pricing? Now, for our particular niche, let's say we found out that, well, the competitors are around maybe $1,800 for these business tax returns. So we can enter that number in here. And what we're really looking to do is just trying to figure out what is that optimal fee going to be. So the next is the target profit. What are we actually trying to hit in terms of profit, right? So we're at $500,000 now. We want to go to $885,000 now. That, some would say, is pretty aggressive, right? This exercise tells us how aggressive we can stand to be without losing clients and hitting our goals. So now the last one here, now this is just a formula here. It basically shows the difference between what you're looking to charge. So we want to charge $2,000, and we know that the competitor is charging about $1,800. So this basically takes the larger of the two. So when we bring on new clients, the minimum price floor we want is $2,000. Okay, so that's how that works. Now the rest of this here, let's quickly go through the capacity impact, because you want to plan how this is going to impact the work at your firm. So if we were to assume a 20% churn rate from the business clients, we know that with these particular numbers, we will lose about 109 business tax return clients. Okay, so right now we have about 545 business tax returns. And again, we can model this out on the Repricing Planner tab, which I'll show you in a moment. But let's just say with this model, we're saying, hey, if we were to churn 20%, we will lose 109 clients for business tax returns. Work reduction is basically showing, well, how much that actually decreases the workload. So that's the other benefit, not just in increasing revenue profit, but actually being able to reduce the client workloads. Another way to ask, if you have 1/5 more time or less clients, what would you do with that? You can probably do a lot, okay? So again, more profit, less work. So this basically shows that. Now, this is probably one of the most important numbers here. This is what I call the sanity check. And this basically is the maximum loss percentage to hit the profit goal. So the profit goal is the target profit, $885,000, at the current target fee. And our target fee is $2,000, right? So what this formula does is says, hey, if you want to charge $2,000 and with a target of $885,000, you can lose up to 21.6% of your clients and still hit that goal. Okay? So if that doesn't make sense, let me just show you another way to look at this. Let's just say, for example, we're saying, you know what, let's be a little more aggressive. Let's go to, say, $2,200 for my returns. Now watch what's going to happen to this sanity check number when I hit enter. 35.8%. So this is saying now you have a little bit more leeway. You have a higher ceiling. You can actually lose 35.8% of your client base and still hit your target numbers, right? This basically shows you what that actual ceiling is going to be and how many you can actually afford to churn before you're not hitting that fee. Let's look at it from the reverse. Let's just say we're going to only bump it up by $1,800. Now this number turns to 0. So what just happened here? This is basically saying, hey, we are not going to hit $885,000. In fact, we're going to only hit $805,000. So when this hits 0, that means you're not going to hit your profit goal. Okay. So let me switch this back to 2,000, and let's walk through this part, because you've pretty much done all the work. Nothing else to really change. This is all formulas at this point now, so you can just fact check a few things for yourself. So just quickly on this part. So this is 50% profit. This is your current revenue. So remember, 60% of your revenue is from the business returns, which is about $600,000. And then the estimated number of entity returns, which is about 545 returns that you're doing annually. And then the difference, right? So the difference from where you're at today, 1,100, and you're looking to get to 2,000 per business return. Okay. The incremental revenue before churn. So let's just say in a perfect world, you increase your fee, but no one churn. That's not likely, but it kind of models out like what that would look like. Now, if we factor in the churn adjusted incremental revenue, so this is basically factoring in, if we double click on this, we can see 20% churn. So if we have a 20% churn, that's going to be the churn adjusted revenue on that. Now, the churn adjusted incremental profit, now this is the same. Why is that? In this case, the only difference here is this is assuming that you can have that profit, but there's no additional expenses. And remember when I said a little earlier in this video, there may be some additional expenses? This comes from that incremental cost per retained return. So remember, like I said, for example, if you're going to boost your fees, and maybe it's going to be $50 additional per return. If you, in terms of servicing that return, let's enter in 50 and watch what happens to this when I hit enter for the profit number. So this is actually lower now. So the profits is actually less because we're factoring $50 additional per return. Okay, so I'm going to switch that back to 0. And again, you can play with this and model this. The new profit, so again, at this profit, at this target and 2,000 fee, we're looking at $892,727 in profit with a new revenue of $1,392,727. Not bad from what we're at $1 million today. So that takes us effectively from a 50% margin to a 64.1% margin. Not bad for a few minutes work, but we're not quite done yet. So so the question is, where do I really get these numbers from? Like, how do I know what to put in here? I can, yeah, sure, I'm looking at my competitors. Maybe I'm talking to my partners on what our profit goals are going to be this year. But how can I do I have to play with these numbers? I created a little grid here. We can actually get a little sneak peek of what those projections are going to be. So let's just say what this does is along here, you can enter in what your fee is, and it tells you along here at what churn rate. So for example, if you were to enter, so what we're at today, we're at 2,000, right? Fee is projected at 2,000. And if we want to have only 20% churn, that should give us a profit of $892,727, which should match this exactly. Okay. Now we can see that we can be aggressive or we could be very non-aggressive. So let's just say super conservative where, hey, we don't want to rock the boat. We don't want to lose any clients. And so we're just going to bump it up a little bit. So if we bumped it up from 1,100 to say 1,200 and to project 0% loss of clients, that only nets us about $554,000 in profit. Not bad, 54,000 more than we have today, but I think we can do better, right? So we're trying to model that out to see exactly where. Now, if we go super aggressive, and I don't recommend this at all, we can increase the fee to $2,500, and we would have to stomach a 30% loss in our client base. And this is just a model. So, the number's your mileage is gonna vary based on the relationship of your clients. So at 30%, that is gonna net us $1,034,545,000. Okay, so quite a significant bump here, right? So again, you want to really work out the number you want here, and then you can just enter in the profit number here, the target, and then what that fee is going to be. If you want to get even more aggressive, you can actually type in. So remember the yellow, you can type in. So I'm going to type in 3,000 here and watch what happens. It automatically updates these projections. You can pop these numbers in, and you know that, hey, if you can stomach 30% loss, you can net over $1.2 million by increasing it to 3,000. Now, again, if you're going to let these clients know that, hey, I've effectively tripled the fee on my business tax returns, you should probably have a good reason for that. And in the next video, we're going to talk about how to actually create an offer to be able to justify a higher fee. But for now, this is how you model it, okay? The last part of this, before I show you how to get the link to this tool yourself, is the repricing planner. All of this is calculated automatically. So what this does is basically it reiterates a lot of the core assumptions from the first tab, so you don't have to keep looking back and forth. And I'll let you go through that. I won't explain these. These are pretty much self-explanatory. You can load up your clients here and it'll figure out what your fees are going to be. So in this case, I just have 10 sample clients. Either have 100, you can pop them in here, 1,000. Obviously, that's going to take a little more work, but you would just enter in your clients, the current fee you're charging. So in this case, I'm charging this client $800 for business return, $900 for this one, $1,000, and then the proposed target fee, and that's going to be exactly what we model that number, right? So it's just basically taken from that target tab there, and it shows what that increase is going to be. Now these are some steep increases, okay? Don't get me wrong. So we want to make sure that we can justify these, but also model out how much churn we think we're going to actually generate from that. And it all should meet the price floor of what we're looking to bring on. So $2,000 for that fee and the annual lift, right? So if we're charging $2,000 instead of $800, that's a $1,200 lift for this particular client. And then now this is the part I like the most because you can actually stagger these things. Again, you can totally send out repricing emails to everyone, but that's a lot. I highly recommend testing this out first. So sending out those price increase letters in waves, right? So we have, in this case, we're going to send out maybe 5 in January at this date, and then another 5 in February. This is just a sample. You probably want to send out a lot more depending on how many clients you actually have. Who's going to own it, right? Is it going to be the owner, the tax manager, the admin, who's going to send that out? The status of it, any notes that you want to put in there as well, and some basic ways to just make sure that the calculations add up. So this is really it. This is really it in a nutshell. This is the model. Now, again, this is something that I find to be a highly valuable exercise because you can quickly model out exactly how much you can increase your profit. Now, if you want access to this video, I'm actually going to drop the link in the notes below. So what I'm going to do here actually is if we get 100 comments on this video, I'm actually going to release the full link to this sheet completely free. So we want to get 100 comments on this. So if you want to drop a comment, say, hey, send me the link or any other comments that you want, just we'll add up those comments and you can share it out. And once we get 100 comments, we'll actually send out, I'll update the link here in the description to have the link to the actual video. So that's it for today. I hope you've enjoyed.